Hi friends, this is Kishore. Welcome back to my channel. Today I'm going through consumer price index data that is released in the morning and how it impacts Fed fund rates, hike decision and stock markets. Let's jump into the show. When I look into the CPI, I would like to know where it comes under in the macroeconomic. In the macroeconomics, if I divide it into subsections, like it comes under like consumers, corporate, housing and sovereign. CPI comes under consumer section. And this is the data today morning released like CPI month on month expected is zero point 0.2, but it came only zero point 0.1, which is good. And CPI year over year expected is 4.1 and the actual is 4.0, which is good. This is core CPI excluding food and energy month over a month. It expected is 0.4% and the actual also the same. And core CPI excluding food and energy year over year expected is 5.3% and actual also 5.3%, which means so year over year core CPI came as expected and month on month also came as expected. CPI only came less when compared to the expected. And this is the month on month chart on the CPI side. So January it came zero point 0.5, Feb zero point 0.4, March zero point 0.1, and it increased in the April to 0.4%, and in the May it came as zero point 0.1. And if I look into the like a chart, so this is like this. So it came up and came down from 1995 to it a couple of times it went huge. Like in 2006, it went up like crazy, like it did in the 2021. But it came down. Right now, it is struggling. It's going up and it's going down. So the month on month is not giving exact trend of the CPI because it is going up in 1 month and it is going down in 1 month, and this is 12-month percentage change. So if you see at the subsections like all items it came up to the 4, and the food is above 5, and food is the one of the major contributor in the right now in the inflation side, and energy is went down. This is one of the major contributor to get the CPI value down, and this is like all items except food and energy it just above 5. And I feel this is the one of the good chart because month on month we have a lot of noise. Like 1 month goes up and 1 month goes down, and in 12 month is like it's we cannot take an average because we do not know how the 11 months back the situation is and how the situation now. So the 3 month annual average rate is pretty good compared to the 1 month, month on month, and year over year. So if you see this, except food and energy remaining all are going down, like total CPI except shelter is going down, the green one, and the rents are going down. Service except rent, that is also going down. Total CPI also going down. Only the food and energy, CPI excluding food and energy, is the one going flat. If it is also goes down, then we can expect the inflation goes down pretty soon. And this is inflation forecast. So I put this comparing with the United States with the euro area because euro area right now in the recession. So I just comparing the inflation, how the euro area inflation with the United States, and both are going down right now. And by end of 2023, the expected inflation rate for United States is just above 3, which is good. So this is the inflation of a couple of countries like Japan, Canada, United States, France, Germany, and United Kingdom and Italy. So when I compared with all other countries in the world, so United States inflation is pretty good compared to the Japan, Canada, or other countries in this chart. And this is a CPI release dates. So today we got the release for the May data, and July 12th we will know the next CPI. So based on the today's CPS data, so tomorrow in the FOMC meeting, most of the people are expecting there would be no Fed rate hike because the inflation is going down. And this is the meeting probabilities we are in the FOMC meeting. So this month they are expecting 94% there is no rate hike, but in the July they are expecting 60% are expecting there is a hike of 25%. But when if CPI data comes less in the July also, then there is a chance of Fed rate they may not hike the interest rates. This is the history of pace of Fed fund rate hike. So out of 9 times only three times, like 2004 to 2007, 1987 to 1989, 2015 to 2019, they Fed raised the interest rates continuously. I mean, not continuously, they dropped couple of times and again it raised. Right now, it's around 15 months. Fed is hiking the rates from 2022 to 2023. So, will they pass the rate hike this month or will they continue? We will know pretty soon. So, if Fed stop rate hike, so how the stock market corporates are doing? So, corporate margins, earnings are going down. So if you take this black line, this is the, if you think this is the play time Fed stop the rate hikes, then the earnings of the corporates are going down from next 12 to 18 months. So the green line is when inflation is low and the blue line is when the inflation is high. So the current cycle is the black line, and we are, because as the Fed is not stopped the rate hike till now, so we are just behind that line. And after looking all these things, will US cross all these hurdles like inflation, housing issue, and the stock market issue, and the recession? So will US cross the 2023 without the recession? If you like this video, please hit the like button. Please share the video if any of your friends looking for similar content. Watch more videos in my channel, and if you like them, please subscribe. Please hit the bell icon so that you will get notification whenever I upload the new video. Thank you so much. Bye bye.